the biggest difference is, like this is my bank, this is my, my investment. I'm one of the shareholders. But when you have a community bank in your team, and for us, it's really all the way throughout. Not all of our team members have bought into the bank, but a lot have. So you're really invested. It's not, I think you look at it's not just a job this is my bank, this is my company. So I think it's incredibly more personable. It's frustrating that some of the large banks use the word relationship banker, because it kind of ruined it. And when you get a new relationship banker every 6 months, that's not what that's supposed to be like. So typically, your community banks are going to have a lot longer tenured staff. I have several that have been with me since we opened in 2007. And quite a few, others along the way as we scaled up that have now been with me 10, 11, 12 years. So I think that's a big plus on the community banking side. As far as lending, 8, 9, and 10 was probably a good feel of what can go wrong or what's good or bad. And if you're a national bank and there's pockets of the country that are really tough, like, when at that point, Arizona, California, Georgia, a couple different areas in the country, Nevada, were really hit hard. So what you do as a national bank is you just pull back. And you may pull back in an industry, say, okay, no more contractors, subcontractors. We're just not going to do that anymore. I've seen B of A do that twice in my career, which is I've seen letters go out. I saw a letter go out the first time they did it in my career, and to a company that they had banked with for 50 years, and said, we are not going to be in this industry anymore. And they do. And as things get better, they're like, oh, we're back. The community banks, don't pick and choose when they're going to lend. We lend all the way through. We lent all the way through the downturn. So did all the other community banks in the area. So, and I'll get to some of the questions at the end that probably will trigger out whether you work with a community bank or what you need. And a lot of it probably is going to have to do with size and how much money you need. We're very heavily driven towards the lending side at Gateway. I only have 16 employees. 11 of us are tied to lending. So that is definitely where the focus is. And 3 of those are business developers. The difference we have here on business development is the business developer, if they're the ones you've contacted, they will always be your primary point of contact. But they also will bring in a lender if it's a loan situation, or somebody from the deposit operations side if it's a cash management issue. So it's really the team getting to know you. So we've talked a lot about Gateway being the cheers of banking. It's like, hey, Norm, when you walk in, once you've been here once or twice, there's multiple people that are going to know you by name. In a large bank, or even in some of the large regionals, when things get tough, you're going to go to a special assets department. And most special assets departments are like, make this loan go away. And just whatever it takes. If the company has to close it. At a community bank, we don't ever want to take property back. We don't want to take a business back. And it's, we're always working with you on how do we make sure that you're viable long-term? And if I can take care of you and you take care of me, you're going to be a client for a long, long time. So one of the things dealing with the community bank is you should be able to get to know either the chief credit officer or the CEO or both. And those folks are obviously sitting in on loan committee and are making the decisions. And you're like, okay, the person that's sitting here, I'm giving my pitch to, they actually are one that has a vote, or they're the ones that are making the full decision.